All right, folks, here we are on Trading Up. We've got Jeffrey Benson in the house. Now, look, we've done an amazing podcast. You've got to go and check it out. There's a link under this video here. He breaks down so much that he's going to break down here today as well. In fact, we're going to hear how he flipped a $47 account to a $1,000 account in just 8 trading days. So, Jeffrey, welcome to Trading Up again.
Thank you very much. Really nice to be here, and thank you guys for watching.
Right, so we're going to jump into your screen and have a look at how you did it and see some proof as well. Righty-ho, folks, I'd like to introduce you to something new here on the Trading Nut channel. It's the Trading Nut Funded Cup, sponsored by City Traders Imperium Funded Trader Program. You can win almost $200,000 worth of prizes. That's for the top 10 winners, and the top prize takes away a $100,000 funded account with City Traders Imperium. Folks, if you want to register for this and show your skills as a trader, click on the link above or the link below the video or in the podcast description. Then sign up for free before the 15th of April 2022 and get 10% off any City Traders Imperium funded challenge just for entering the competition. Good luck, folks, and we'll see you in the cup.
Amazing. So this was the account. Yeah, I carried my team along while I was doing these flippings. Most times I always let them know. So this is like $47 to $1,000 in 8 trading days conservatively. So I was showing them the profit right here and how I did it. So I explained everything to them. All right. So you can see it was, at this time of filming, it was 1,170. Yeah, 1,173 on equity. All right, so this was how I did it. It's pretty simple and just my entry strategy. So you can already notice that I had a lot of entries right here. So showing you, let me show you the, what's it called? Like if you check the lot sizing at some point, you find out that I just had 0.01, 0.1. So it's very conservative, 0.01, 0.01, 0.02. And the maximum I had was 0.05. That was when I was already deep in profit, just as I explained. So basically how it worked is, while I was starting out, I did my position size calculator. So doing my position size calculator, I was risking about 25% of my account at the time. I mean, this is a flipping account. I can afford to lose it. I was ready to lose everything. So it's flipping. So I do an average stop loss of 20 pips, and I select GBP/USD because that's the only pair that I trade. So the lot size I'm recommended to use right here is 0.05 lot size. Okay. So I have to start scaling in first because 0.05 divided by 5, that's what I do. I take my recommended lot size and I divide it by 5. So why do I divide by 5? Because I always want to have 5 entries. Okay, 5 entries using dollar cost averaging. So I went in with 0.01, 0.01, 0.01, and I started scaling up from there. Now let me show you my typical entry points. So this is my typical entry point like you have here. Anytime you see a box right here, those are my typical entry point. These are my typical entry point. Here, I lost this trade. If you see an X on it. So I won this one and I won this one. On and on. So I can shrink my chart. You're going to see a lot of entry points, my day-to-day entries. Okay, so what happened? What happened there was, let's say, for example, whenever I see a psychological level, just as you see right here, psychological levels are random numbers that banks hedges to pay attention to, like 1.31500. These are psychological levels. And this is my low of the week. This one, I already made a ton of videos on this on my YouTube channel. So if you want to check it out, that's fine. This is low of the week. And here, low of the week was meeting with trend line bounce. Now we have 2 types of trend line. We have trend line break and we have trend line bounce. So upon touching here, and it touched here and came back here to touch again. So I knew it was forming an M. So this is an M pattern. So if you want to look at it this way, an M. Oh, this drawing too. So it's an M. So I knew this was the second leg of the M. All right. So there's a trend line right there, and it's close to the psychological level right here. And this is a low of the week. So remember, I said whenever I have 4 confluences, that's a deal breaker for me. That's a nice trading opportunity. So when I saw this, then I went here. I started scaling in small at a time. So that's how I was able to make that money. And I also trade for proprietary firm the same way. So whenever I see an opportunity like this, I'll just look for my stop loss level somewhere a little bit far. It's always an average of 20 pips stop loss. So that's why you see whenever I was calculating my position size calculator, I always put 20 pips. So sometimes it could be about 15 pips. It could be 10 pips. It could be like that. So I just put it right there. So I start scaling with 0.01 first, 0.01. So even if it moves against me, I still scale it with 0.01. My stop loss will still be at the same spot. All of them, all the 5 are going to have the same stop losses. the same stop losses. So because of ease of moving, I'll just copy and paste, copy, paste, copy, paste, copy, paste. All right. So once it start moving in my favor, I'm going to move the stop loss. I'm going to break it. I'm going to break even. Okay. Sometimes I don't break even too early. So the only thing I might just do, I'll just tighten the stop loss. I'm going to move the stop loss to somewhere around here. Okay. That's the only thing I do. I'll only tighten stop loss, not move it farther away. I don't want to move it farther away. Instead, I tighten. So I'm only going to scale in once all my opportunities right here in this box are protected. They are all into profit. So I move all the stop losses right here. So from here, I can start scaling in like in 0.02, 0.01, 0.02, 0.01. Just keep scaling in, keep scaling in. So if it's able to break this next psychological level, then that's a very good point to go crazy with it again. Scaling like that. So once I start seeing multiple week rejection close to the psychological level, I start planning my exit. So that's what I do. That's how I get in. It's a pretty straightforward system.
And where are the stop losses on those trades that you scale in at?
Yeah, the stop loss will be at the break-even point. So exact same break-even, the new break-even point. So let's say, for example, I've got entry here, 0.02, 0.01, 0. So all of these stop losses would be here. We'll maintain this point. The idea is all of them should have one stop loss point.
Okay, right. So if that was to stop you out, then obviously the whole position would be at zero if those ones got stopped out.
Exactly.
Right.
Would be zero.
Yep.
Yeah.
Okay, that makes perfect sense. Cool. Awesome stuff. Now, have you got another example of this trade?
Yeah, I've got a couple of them. Like, it's a lot.
Folks, when you're done watching this, go check out my sponsors, BitGet. They're undoubtedly the best crypto exchange for traders, and you get over $150 in rewards when you join. Click the link below the video or in the card above.
So right here, here's another very good opportunity. Another example. So we've got a trend line right there touching at this point, and there's a psychological level right there. The psychological level right there is 1.34000. So if you care about how I put psychological level around, they're just basically round numbers, like 1.30000, like round up numbers. So that's how I do it. From there, 50 pip far apart, 50 pip far apart, 50 pip far apart. So that's what I do. So if you can calculate from here to here, it's definitely going to be 50 pips. So that's how I do the psychological level. So the four checklist, psychological level check. That's what I do every now and then. I just make sure I do like a baby trader. Psychological level check, trend line check, chart pattern, and chart pattern check. So as at this week, there should be low of the week right at this point too. So I'll always delete that. I always modify that. So low of the week should also be here. Low or high of the week should also be here. So check. So that's 4 out of 4 confluences. Once it's 4 out of 4 confluences, I call it killer trade. So killer trade. So I get in right there. That's how I do my stacking. I get in like entry. So as this one, I call the entry right at the tip. I'm a very patient trader. So the last thing that signals our entry is M pattern. So this is the first leg of the M. This is the dip, and this is the last one coming right here. Right. So once it's on the second leg, that's when we start getting in. So on the second leg, that's where I'm waiting for my entry, because I don't want drawdown. So I want to get in with little to no drawdown at all. That's my target all the time. So once it comes here, I'm just going to be entering with the division of 5. Let's say I'm asked to use 5 standard lots. I'm going to do 5 divided by 5, which is 1. So I'm going to get in with 1 standard lot, keep moving in my favor, 1 standard lot, 1 standard lot, 1 standard lot, like that. That's how I keep scaling in. Until it's 5 maxed out. So once it is 5, my stop loss is going to be about, depending on level. So structure wise, on this trade, my stop loss should be somewhere around structure wise. I'll pick my stop loss a little bit above here. This will be my stop loss level. All right. So I'm going to put my stop loss right there, but it's not always more than 20 pips, average of 20 pips. So from here, I'll keep scaling it. So once there's this noise right here, what I'm going to do is, with this noise right here, upon its retracement, I'm going to keep adding new positions again. So it's going to form a double top again. This is the first leg, second leg. Forming this double top, I'm going to add in again. Start scaling in. So by this time, I would have moved the stop loss to break even. I would have broken even on that one. So I keep scaling in. That's how I trade. So apparently this trade I caught, that's the exact same way I'm explaining right now. That's how I call this trade. That's why you see this gray outbox right there. So anytime you see gray outbox, you just know I've also sent that signal to my Telegram channel, because that's how I send my analysis every now and then. Okay, so you can see this is an example, a typical example. Yeah, anytime you see gray outbox, that's where I'm getting in. Anytime you see gray outboxes, and I also send my chart. Once I'm also stacked in, this is a live example. Once I'm also stacked in, this is what I do. So this one a $400,000 funded account with the funded trading program, like the cap you have on with you. You say they sponsor your program. So I'm currently with them.
CTI, Traders Imperium. Yeah.
Okay, so this is an account I have with them. So you can already see this is entry at the stop. So the stop loss was right here at this time. Okay, you notice the stop loss. So these ones were already in profit before I was able to scale in right here. All right, because the risk I was asked to use 20 standard lots on position sizing calculator. Like if you put in a 400K right here, 400,000, and you're risking 1%. Okay, your stop loss is 20 pips. So it's 20 standard lots. So I'm going to do 20 standard lots divided by 5. So that gives us 4 standard lot size. So that's why you see my entries are always in 4 standard lots, 4 standard lots. So I didn't really risk too much. So it's a very conservative entry for me. Very conservative. So once you move to the next strategic level, I close out immediately. So that's how I basically much trade. And everything is also documented on my Telegram channel right here. Yeah.
Brilliant. Well, look, that's absolutely fantastic. Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Jeffrey, that's fantastic. Look, guys, if you want to know a little bit more, then please jump into the podcast that we shot, link under the video here. But before we wrap up, what's the best way for the guys to get hold of you?
Yeah, on Instagram at Jeffrey_Benson, and on Telegram my channel is at FirePeepSignals, and I'm not on Facebook, so on Instagram and on Telegram and on YouTube, my favorite place to be at Jeffrey Benson. YouTube is my favorite place.
Cool. Well, look, we'll put a link to Jeffrey's show notes page underneath the videos. All those links will be on there. So if you do want to find them, jump into that page and you'll be able to find them. Look, Jeffrey, thanks again for coming on the show. Absolutely fantastic having you here. Guys, do remember we've got the Genius Trader out there as well and my Robot Builders Club for anyone looking to automate anything. But until next time, I'll catch you in the markets.